in my opinion, Realty Income is one of the best REITs around, total period, right? Vici and maybe a few others are in this category of REITs that I just think are phenomenal, right? We can see the yield is a high dividend yield, right? It's above 5%. In my opinion, anything above 5% is a high. Some people would argue, maybe it's a little bit higher, whatever. That's what I think, right? I like this in a dividend portfolio that is trying to aim 5, 6, 7% yield while maybe maintaining share price not going down, but maybe not necessarily matching inflation with share price. And this company should do that. You may see, oh, it's down 23%. Scary, right? It's really not telling the full story. That was at kind of a crazy rare peak. You can see this. And after COVID happened, it really hasn't done so well since then. But if you bought, like, let's say 10 years ago, that's usually a good time frame to look at. Since early 2015, it was somewhere in the high 40s, low 50s, meaning you actually increase share price a little bit while maintaining this really good dividend all throughout, right? 5.5%. That is very, very good. We could go back to 2000. It looks much better then again, probably the yield was not as high, so that's not really telling the full story. If we say, oh, you get this yield plus this over long term, I'm not saying that still shows how good of a company is. It's been consistent since 2000, but I'm making the strong assumption that they did not have this yield throughout that entire time period, right? But either way, it's a great company, right? I was already looking that down there, just making sure I'm not tricking you by saying this is a different stock, right? We're on a Realty page. We can see PE here. Personally, for me, not that PE doesn't matter at all for dividend-centric stocks, but it doesn't tell the full story. What's much more important to me is the yield plus the share price over time, right? The only way I would really be concerned at PE is if it was at like a crazy high peak, right? If it was at a high peak for a dividend stock, then I would be concerned about it maybe, but I'm not necessarily concerned. If we're nowhere near high right now, right? We're somewhere in that range. Honestly, we're lower than where we were in 2000 or 2022, 2021, 2023 was the only thing that was really comparable. Let's take a look at some of the dividend history because that's really what's important for the stock. You can see 2016 through 2019, we did really good. We're increasing 6%, 4%, 3%, 3%, which was well outpacing inflation in terms of the dividend yield, which is very good. Since 2020, it hasn't quite done as good, right? 2%, 4%, 3%. Then this year, we don't have the last quarter, so we don't exactly know. We could probably guess, but I'm not going to make assumptions, right? So we are historically 2 to 3% would be matching inflation. We have done that. Just this was a high inflationary period in the United States, not too surprising. So this technically did not outpace inflation in the last 5 years, although historically, at least since 2016, it's done a good job of, during most times, most periods in U.S. history, it would be outpacing inflation, that dividend growth. So I'm not super worried about that long term. The yield seems to be growing. It seems to be, it's a good, healthy company, REIT, right? It just is. And they've missed slightly some of these. This one was actually pretty massive in Q1, but they're missing a little bit, but it's really nothing crazy. And most of the REITs have done that at least a little bit. And like I said, it's hard to find REITs this size that do this well, that get this dividend yield. It's just hard to do. And the company mainly is trying to derive that dividend. You can see it, right? We invest in people and places to deliver dependable monthly dividends that increase over time. This company is aimed for returning those dividends to you. That is what they are meant to do. That's what they're going to do, right? We can see Schwab actually really likes them. They give them a 52 percentile rating. They reiterated that just yesterday, it looks like, actually. I think yesterday was the 29th. Maybe it was a couple days ago. But it's a good rating. It really is, especially with a REIT, because you don't really expect REITs to outperform some of the better stocks, right? Like, don't get me wrong. I like REITs and I like dividends, and they have their purpose, right? But you don't expect to outperform Apple or Google or Microsoft in a 5-10 year period, right? You just don't, right? And if you do, go for it, but I'm telling you probably won't that way. REITs have their purpose and they serve a good purpose, which is deriving income from them, right? But it's not necessarily like, oh, I'm just gonna make all my money from REITs, right? If that's your thing, go for it, all you, but probably tech will outperform in the long term, very likely, right? They have a bad ESG rating, whatever you think of that, but generally these ratings are decent. I don't necessarily get the non-economic moat. There's not a lot of REITs this size, right? We can see they're pretty large. right? $51 billion market cap. There's not a lot of REITs this size. There's just not a lot of huge REITs in general. It's a tough thing. There's not a lot of companies of it. Only so many are public. Only so many have been around since, the 90s, right? So we can take a little bit look at historical PE. If we look, it's kind of right in that range, especially for PE. I'm assuming the normal PE, trailing PE, is just because of this bad quarter in Q1, right? That's why PEs rise. But forward PE is right within that range we expect it to be, somewhere between 37 and 44, right? And it's probably even a little bit lower than normal, considering the fact that we are lower than where we were in 2021 and 2022. And that's just this last year and a half or so of it. So it's right within its normal PE range. This stock is not overpriced historically. You can always determine, hey, this is overpriced, not for me. But historically, this thing isn't overpriced at all. This company is going to do, like I said, high yield. It's going to probably maintain its share price over the long term. That's what this company is going to do. That's what it's trying to do. And this is what you want. This is the perfect stock for it, right? Not quite six. Yes, 7 of the 21, so a third are saying buy or strong buy. The rest say hold. Usually with REITs like this, they don't give crazy ratings, analyst buy ratings. That's just how it works, right? So I think I've said what I wanted to in this video. I've said mostly what I think about it multiple times at this point. It's a good long-term hold, in my opinion. Of course, not financial advice. You do with your money what you want. If you are wanting to get out of it what you want, which is a 5.5% yield in a stable company that's proven itself long-term, and that will probably roughly maintain share price. So I appreciate you for watching this video. If you enjoyed, I appreciate if you left a like or subscribe. I do daily stock content on this channel. I cover everything from tech to high dividends to basically everything. So I appreciate it if you did subscribe, because YouTube often recommends my content out more. Often my best view days are my best subscriber days. It's not just because I'm getting more views, and whenever I get a subscription, YouTube pushes my content out more because they realize people enjoy me. So, but anyways, I appreciate if you just watch this video, and I hope to catch you in the next video. Yeah.